Okay, welcome back to Hot Stocks. It's not hot right now, but well, Liberty Shoes has done reasonably well in the last 2 or 3 quarters. I think in a spate of 7 days, I think the stock went up some 40-50% as well at a point of time, which is the case with a lot of other shoe companies as well. But a good set of numbers posted by the company this time around. Rise in sales 22%, margins have inched up, and the PAT is up 81% at around 3 crores. Adesh Gupta, CEO of Liberty Shoes, joins us right now from Delhi. Good evening, Mr. Gupta. Thanks for joining in. Put the quarter into perspective. The sales have gone up 22% and the margins have inched up almost 100 bips on a YOY basis. How did this happen, and can this continue?
Well, what we believe is that we have seen the last 3 quarters of consecutive sales above 100 crores, and the third quarter has even higher numbers compared to first 2 quarters. So we believe that this story will continue, and we hope that the fourth quarter will also have good numbers and better numbers. And also in terms of the profitability, we have seen a remarkable increase in the last 3 quarters, and we are sure that we will try to match up the expectations in terms of the profitability for the full year ahead.
While there has been tremendous growth on the revenue front, what's the view that you have to give on margins, which have also extended themselves? So it's above about 8% in this quarter. What's the near-term target over the next, let's say, 3 to 4 quarters?
Well, what we said last time that we will try to maintain the same EBITDA margins or even a better EBITDA margins. But going forward, we are looking for a price increase, as I mentioned last time also, that we are looking at revising the prices, which will improve the EBITDA margins for the next quarters coming in the next financial year, which should help the margins to grow further.
I believe the last time that we spoke to you, you did hint towards some bit of a price uptick that you would need to take in order to maintain margins and increase sales as well. Has that happened, or will you undertake a price rise in this month?
No, as I said, shoe industry is not a commodity. It is a fashion cycle where any decision which you take is normally takes 6 months for implementation. And so, we have already made a decision that within the next couple of weeks, we will make a price hike, which will eventually, start from the beginning of the next financial year, and which should, give us a better margins, EBITDA margins, as well as PAT. So we hope that, both the things will improve in the next financial year.
Okay, you had also mentioned that you set a target of 500 odd crores in terms of sales for the year. If I look at the first 2 quarters, you did around 100, you've done 110 this time. Am I to presume that you would probably do sales northwards of 150 crores in Q4?
I think we have to look it into different perspective. We have, in the beginning of the year, merged our retail company, which was Liberty Retail Revolution, which was a subsidiary. But we have not yet added the numbers of the last 3 quarters. But at the end of the year, we will merge those numbers, and you will see that the numbers will be much higher. And we hope that we will be able to match the figures of 500 crores, which we were expecting in my previous statements and in my previous interview also. So we hope that we will be very close to those numbers.
But non-merged.
So when we merge the two numbers put together.
Fine, but non-merged, what would you do? I mean, leave aside the merging of the numbers of your subsidiary, the standalone Liberty. Do you think that will do 100 crores, 110 odd crores, or less than that?
Yeah, it should be better than the third quarter. So we hope that the next quarter will be even higher, because normally the fourth quarter is much higher even compared to third quarter. If you see last year also, we had clocked higher numbers, and we hope that we will maintain those kind of growth rates compared to fourth quarter year-on-year basis.
Right. What about your market share? Where does the current market share stand in the organized segment, and what's the target of how much you would want to increase it to?
Well, in this industry, unfortunately, we don't have the right statistical data available, because majority of the companies are not listed. So you will find that those numbers which we assume are guesstimates, but we believe that in the organized trade, we are close to about 10 to 15% in terms of the market share.
Okay. while things are looking up in terms of the business, in terms of your overall volume numbers as well as profitability, your finance cost has also risen this quarter. How are you looking to tackle that? What's the call on the total debt on the books, as well as how you plan to reduce the finance cost?
Well, basically, the company doesn't have any long-term debts in the company. There are not too many debts at all, almost like a debt-free company. But we do have working capital, which is about 100 crores. And we do not see, a major spike in, the borrowings in terms of the working capital. But surely when you are, funding the growth, you need certain finances to run the, to run the business. But which means that, if the interest rates are at the same level, there will be a slight increase in the finance cost, but it won't be substantial.
One last thing. What about FY15? Because your stock is not a cheap stock by virtue of the way it's risen. I think you're trading at 22 times the current year earnings. It'll obviously become cheaper on the FY15 basis. Hence the question, how much would you grow in FY15?
Well, what we are doing is that, there has to be a plan to grow. So what we are looking at is to grow our retail, spread. And in that, we are looking at, adding almost 100 stores on, company-owned, company-operated, as well as franchisee stores. And if we add, those 100 stores in the next financial year, we should surely look at a very, very high number growth going forward in the financial year 14-15. And we will try to maintain, the overall growth rate of about 20 to 30% even next year.
All right, Mr. Gupta, we leave it at that. Thanks very much for joining us and giving us those details on your earnings and the business prospects as well going forward. I think the 6-month chart and the 4-month chart on Liberty Shoes pretty much gave out the story. The stock has risen close to 83% in the last 3 months. And that's been a phenomenal run for the stock. 151 at last count for Liberty Shoes. That's 85% over the last 6 months. Address earnings, and Yes Bank comes out with numbers. Poonam joins us with what to expect. Poonam.
Well, Tanvi, we expect a PAT of 388 crores for Yes Bank, which is a growth of nearly just 13% YOY. So this is a decent number, but not a very huge positive number. Net interest income growth is likely